Hello, welcome to Am I Rich channel, and my name is Keith. Man, it's been snowing a little bit, and it's supposed to snow like over a foot the next day or so here, and I think the polar vortex is on its way for next week, so I'm not exactly excited about that. But man, speaking of cold times, a lot of people are talking about like a potential recession on its way, so I thought I'd look at a stock that's a little more recession proof than others. And cheap stock that I've kind of been looking at is Kroger. So Kroger, ticker symbol KR, is a grocery store. It's a big grocery chain, specifically in the United States. It's not really international so much. And they are, I think, in most states, they're the top two grocery chain. I think they're the top. They're probably right around number 2 for the whole country, but they're in between anyways. 2 or 3 for the top grocery chain in the United States. Their biggest competitor is Walmart, I think, typically. But of course, there's up and comers in that space, so that's something to think about. So let's go over the kind of some little statistics here about it. The PE ratio currently is 6.5, which is really cheap for most stocks, especially a stock that you think is fairly stable. You'd think you'd probably expect a PE ratio closer to 20 or 22, something like that, maybe 18 at the low end, but 6 is really cheap. But then if you look at its forward PE is expected to be about 12.3. Which is still cheap for a forward PE, but one thing it kind of warns is that their earnings are going to likely be less than they were the year before. So it's kind of a thought that they might be slowing a bit compared to the last year or so. And then the price to book ratio is 2.9, which is kind of average. It's fairly reasonable, I guess, for a price to book ratio. Its dividend is 2% yield currently, which is also fairly middle of the road. It's not bad, it's not great, but it's better than a lot of other stocks. I think the stock right now is trading at around $28.30. And 2% dividend, it could, obviously it varies with the price. So that's one thing I just wanted to mention. And now the other thing is the 5-year growth rate that this company has had has been better than a lot of grocery stores. Most grocery stores are kind of following the market, like between the 9 to 14% growth rate. But Kroger has been growing at about 23%, which is quite a bit better. Some of this growth, though, has been kind of gained through share buybacks. They've purchased a lot of their shares last year, and that's really helped push up some of these ratios for them. So yeah, so the company is kind of rated cheap in general, but not necessarily. There's some warning signs there, I guess. So basically why I think that this is cheap, now there's kind of a bull thesis about it, is that the reason the stock price kind of went down in the first place was their earnings weren't really that great. They had a kind of a slow couple quarters, and people were thinking, oh, it's not going to keep up with maybe Walmart. And then Amazon bought out Whole Foods, and last year whenever Amazon bought out some company, then everybody in that sector basically just dropped down, like as if they're totally dead. Not had no chance of competing with Amazon because Amazon sells things online, but like in 3 years eBay could take over Amazon. I have no idea. So like it was a little bit of jumping the gun. I'm not saying it couldn't happen, but that's why the stock price dropped dramatically. And then it kind of creeped back up and then dropped again because still people weren't really sure what the direction was. But since then they've had plans in motion to do things like online grocery orders and potentially have delivery service, just like Walmart is planning on, autonomous delivery of groceries. Kroger's, they're in the hunt just like every other grocery store. They're trying to figure out the future as well. And if Amazon, Whole Foods comes out with some kind of, they have a grocery store where it's very popular, where you just walk into a grocery store and you can just pick up anything and walk out, and AI scans your body and tells you how much you owe, then it won't be long before other companies do this, because Amazon doesn't have some kind of magic formula on this kind of AI technology. So I don't really see that. I see that as like a potential advantage that something like Amazon Whole Foods would have in the short run, but in a year or two, big established grocery stores would catch up, and it wouldn't crush their market. I don't think it would hurt them, slowly. It would be like a slow death. So I kind of think their price got kind of out of line because of these factors, and then they've been kind of doing well, and then because they had extra cash, they thought they'd purchase back their stock to try and help their shareholders, which is it was cheap. So it was probably, if your PE ratio is around 6 or something, then it's not a horrible idea to buy back stocks. And then all analysts, even up to 2022, they still see this company growing its revenue and earnings. So I don't really know that it's a dire circumstance for the company. I think it's basically going to continue to grow. It may slow down a bit in its growth, like it won't be maybe 23%, but I think it's still going to be at least the market or a little bit better. And then, like I mentioned, if it's a recession coming, people still have to buy groceries, and it's nice to think people are going to buy like stuff at Whole Foods or only shop at the cheapest grocery store, but Kroger's not that expensive. I mean, for the people who can't afford, they can only afford cheap groceries, they might go to Walmart, but if they're really close to a Kroger, they're going to go to Kroger. Kroger has, good locations for their stores, just like any major grocery store that has been around for a long time. They get their niche spots, and they kind of hold those regions of different towns or cities, and people just shop there. Like it's not that they can't get hurt by competition, but they have not a solid moat, but a fairly stable moat. So that's my bull thesis. The bear thesis is, of course, they have no idea how to compete, and they sell off. Well, I don't know. I guess if somehow Amazon could do much cheaper groceries than them, or if Walmart, everybody just wanted their groceries delivered. I just don't see it happening. So I don't really know that the bear thesis is very strong. Their stock could go down slightly in a recession, but I don't think it's kind of one of those staples. It's like a McDonald's maybe, or a Campbell's soup, something that you think like people are going to stick to. I don't know, Campbell's soup, I don't know if anybody drinks that stuff or eats that stuff much anymore. They probably do, but I don't know if it's as popular as it used to be. But Kroger, I can see, is just keep going at a steady pace and likely growing in the future. Worst case scenario is it wouldn't grow much and it would slowly die off. Either way, I kind of think that the price at $28.30 or 33 cents, I think it's cheap right at the moment. I think probably in the next 3 to 6 months I would expect it to pop up a little bit more, and then unless there's some drastic news that nobody's heard yet, obviously, but I think it would probably pop up a little bit. If it got over 29 or 29.50, I probably wouldn't buy it, just because I don't know if the gain would be really worth it or not. But at its current price, I think it's a pretty decent buy. And even if the worst case scenario happened, I still think analysts still expect its revenue to go up into 2022. So maybe not from the levels it's at right now, but from this next reporting cycle probably, or maybe in 2 quarters, it'll still go up from there, and it'll still have stable growth. You'll still get 2% dividend, an okay dividend, and then it'll probably go up to like $32 a share at the worst, I would think, 33 maybe. So in that kind of time period, like in a couple years. So worst case scenario, I don't think you'd lose money. That's my thought, but I could be totally wrong. So what do you think? Like, is Kroger a great grocery store, or do you just like hate Kroger? What do you think? Do you think this is a good time to buy? I kind of think it's a good time to buy, so that's my thesis. I'd love to hear what your opinions are. Who knows? Like, do you guys think this is? I kind of think this is a Susan Boyle of grocery stores. Like, you think it's not a very good grocery store at first, and then you kind of look into it and you're like, oh wow, this is actually amazing. And then maybe a year or two down the road, it'll just not be as significant anymore. So anyways, that's my thoughts. Thanks for watching, and see you next video.